Hi everybody, this is Sean Overton with OneStepRemove.com, and in this video we're going over a trading strategy that I've developed using the backtester. And in 2011 I came up with various ideas, and here is the result of when I looked at the data. This is the strategy that I decided is most likely to do best in the future. And you have a couple of key charts that are probably likely to catch your attention. So the gross profit trading standard lots 60 times is $2,510. I assume an average trading cost of 2 pips on the euro against the US dollar, which this is trading. So that yields a total trading cost of about $1,200. So you have about a $1,300 profit here on this trade, or on this system in the year 2011. And you can see the various metrics up here on the screen. I'll zoom in so you can digest it for a second. And then when we go over to the graphs, there's a couple of things that I'd like you to notice. Number one is that you see lots of flat horizontal lines here on the equity curve. The reason for that is that in this strategy, not a lot is happening. The strategy is when the price is really far away, happens to be 1.5% away from the moving average, the 200 period moving average, you buy or sell. If it's too far below it, you buy. If it's too far above it, you sell. And it really is that simple. But it doesn't frequently get that far away from the moving average. What often happens is that the market is quiet the vast majority of the time, and then you have these periodic explosions in volatility, and when that happens, this strategy is tending to profit. And a couple other metrics that I find important and most people don't understand is the entry efficiency. I have videos and blog posts about this, but takeaway here is that the average is 56 on entry, and on exit it's about 75, 73.3, and that's over 60 trades. That's not enough for me to feel crazy super confident, but it's enough for me to think, yeah, this looks good and this is solid. It's worth walking forward and seeing if it holds up or not, and that's what I'm about to do. These are the settings: 1.5%, 200 period moving average, trading standard lots, 100,000 units on a 30-minute chart. We'll change the year to 2012 and walk it forward. And what you'll notice is that the number of trades drops. It goes from 60 to only 22 in an entire year. And that becomes clear when you look again at the equity curve. Again, we have a lot of very long, flat, straight lines. And whereas on the last result you had trading in April and June, July, October, this really only has about a full month, or the month of September has half of the trading for the year, and then you have a handful of trades every other month or so. So it's definitely not an active system, and it does hold up. It continues to make a profit. The profit factor is the same, but unfortunately the return has dropped from being about 13% to only being 1% and change. And again, the reason for that is the volatility. I would expect that if volatility was high in 2012, the strategy not only would have made a profit, but it would have made a much more substantial profit with the number of opportunities coming its way. So again, I'll zoom in here so you can take a look at the metrics. And then we'll also go to the graphs where I'll show you the entry efficiency is right where we expected at 56 to 57. The exit efficiency has dropped quite a bit. Again, that's sample error. We are looking at a very tiny number of trades, and I'd expect this to go up as the number of trades goes up. If you have any questions or you'd like to download the source code, you can find me at www.onestepremove.com. My name is Sean Overton. Thank you for listening.